right, back with another Profit Strategy podcast. And back with me again this week is Chris Johnson. Chris.
Hey, Tom, how are we doing today?
Man, it's another Friday.
Yep, absolutely. Thank goodness.
It's like I just spoke to you yesterday.
Well, I don't know whether I'm happy they fly by. I'm sure when you get to the end of your Fridays, and I think you know what I'm talking about when I say that, you probably want to see them slow down a bit, you know?
Yeah, absolutely. Absolutely, man. Oh, my gosh. My wife is so tired of doing the same thing. You know, it's literally, we've been doing the same thing for almost a year now.
Mm-hmm.
Stay indoors. You know, I mean, obviously for me, in terms of, what we do, I've been spending a lot more time, videos, articles, education. And it's because I'm bored. You know, I mean,
Okay.
I can't go out. I can't,
All right.
can't go down to the local restaurant, or go out for lunch, or whatever. It's getting to her.
So curiosity's killing my cat here, Tom, because you
And,
used to work at Home Depot.
I told her, I said, this is a long game. I said, consider this, 9 holes of a 36, of literally an 18-hole golf course.
Mm-hmm.
We're at the halfway mark, in my mind, with these additional strains that are coming. And, Dr. Fauci now says he's free to speak. I always thought he had freedom of speech, but maybe he didn't. I don't know. I'm not in D.C. I never planned to be in D.C.
Right.
But anyway, I mean, let's take a look at the market. So, here we are. We got 5 more days that have passed. But what's changed about the markets, in your opinion? Have you seen anything?
Absolutely. I have seen a lot of profit taken over the last 5 days. If you look at the steel companies that were rallying right out of the gates in November, they took off and went up 30%. And then they pulled back a little bit into the beginning of January. They took off another 24%. I mean, U.S. Steel is up 100% from where it was trading in the last quarter of last year. Now it's pulled back another 20% here this week. So you're seeing the traders take profits from some of the areas that have gotten a bump off of the election results. Clean energy, very similar there too. When you look at it from year end, you've got stocks like, if I put them in order here, as I'm looking at my list that I watch, Plug Power's up 88.6% since December 31st. Sun Power, 63%. You've got Fuel Cell up 56%. But in the last week, Tom, these names have started coming down. And it's simply because we're seeing profit taking. This market's bubbly right now. This market's definitely bubbly, and you're seeing profit taking from the high alpha names.
And you know what, Chris? Mm-hmm. You wouldn't know if all you did was watch television and see the big 3. Because you take a look at this week, for instance, the S&P. I mean, it hit new highs, I think, briefly yesterday. It hit new highs the day before. It's literally been an up week for the S&P. But you know what? My guys did some research on this, and it didn't take long to figure out that the majority of the moves that happened in the S&P 500 and the NASDAQ were all FANG stocks. Just this love affair with FANG stocks. And they represented, I believe, and don't quote me on this, but I believe FANG represented well over 90% of the up move in the S&P 500. Because if you take a look, if you strip out FANG, it was a down week.
Oh, yeah. And you've got banks that are right now hitting their earnings, and typically that is the time to be selling the banks. The other one that we haven't come out, and I'm surprised it wasn't the first thing out of my mouth, Tom, 1 week return on Bitcoin, at least if you look at the Grayscale Bitcoin Trust, which is the easy way to play Bitcoin, down 15%. What's going on there?
You don't have to tell me.
Yeah.
I'm looking at it. I'm actually trying to find some longer term buying opportunities, and 30,000 was a good short term support because it's bounced off that. It bounced that off that 2 weeks ago. It bounced off that number again this week. Because as we're coming into Friday, Bitcoin is it made the bounce, and we're now back in the 32s again, but well off the highs of 40 that we saw just a little more than a week ago.
Yep. Now, how
So,
about let me expand that and extrapolate it out. Riot Blockchain, ticker symbol RIOT, for those that don't know it, up 8.2% as we talk today. That has been taken for a ride here over the last week, along with Bitcoin. Obviously, the connection there, it's down 18.6% since last
well,
Friday's close.
you
Is
know, and
this?
let's call a spade here,
Mhm.
Chris.
Go ahead.
Riot Blockchain really isn't a blockchain company. All they
Nope.
did was change their name.
Yep, they sure did.
They changed their name, and all of a sudden, everybody thinks this is like, for instance, remember Zoom when Zoom came out? ZM is the symbol,
Yep.
and there were people that were buying ZOOM, which has nothing to do with webcasting, but yet it took off too because a lot of, let's call them ignorant people, really just didn't know. They didn't do the research, and they said, "Oh, I'm going to buy Zoom," and they typed in ZOOM, and that's what they got.
Yep.
But for
I
whatever
remember
reason,
that story.
Riot
Yeah.
Blockchain, for now, Riot Blockchain is it's a crypto play, and
Mhm.
if for anything, merely because a lot of people just think it's moving higher. I want to talk about one more stock. We'll stay away from the overall markets. I do want to focus on something on the S&P. But have you been watching GameStop at all this week?
Oh, it's the mother of short coverings. This is teachers that, and there aren't many in finance and college that talk about short coverings and the mechanics of a short cover. This is the mother of all short covering rallies, and it's been a great catalyst of private equity coming in. I mean, it's a great story behind it. They had good sales for December. Short interest was 10 times the average daily volume. The short interest to float was up in the 80%. I mean, I just used a description on one of my chats, Tom, and you're familiar with this living in Florida. When the dolphins start to circle around the school of fish and they cloud up all the water and then they just start feeding, that's what happened with GameStop, and it just turned into a
It's
feeding frenzy.
okay. So I had to go to uh, some knowledgeable people on this,
Mm-hmm.
aka my kids,
Yeah.
and they said that my son was saying this company is going to be just like VW. He said right now what's happening is all the TikTok investors, Reddit investors, all these guys are pushing this higher because they know, they're saying buy it at any price. This
Mm-hmm.
is what's going on social media. Buy the stock at any price, and their whole purpose, a lot of these people's purpose, is to just lean in on the short covering. Short covering is at 110%. I
Mm-hmm.
didn't know you could get above 100% when you're shorting stocks, but the short interest is at 110%. It might be options related. I'm looking at the options. I was looking at the implied volatilities. 1 day options, the options that expire today. And many of you are going to get this podcast. The market's already going to be closed, but the 1 day options that expire today, the calls were trading for over $1. I imagine the puts are going to be at least that price. So you're talking about something that has 1 day to expiration, and yet the implied volatility is suggesting that there's going to be another. There's going to be at least 5% move in the stock today. Now, next week, the options that expire next week, I took a look at those too. They're selling at 20%. If you look at the at the money calls and at the money puts, you're talking about a projected 20% move in this stock just in the next 5 days.
And it will probably happen. It'll probably happen. You know what? Going back to one of the things you pointed out, Tom, people wonder how you can get a stock that is shorted beyond its float. And those are the shares that are available for purchase out in the market. You got those shelves, the shelved shares that are sitting in a closet somewhere in GameStop's headquarters that are available for trade. But I always put it in this way. They're hard to borrow, but doesn't mean you can't borrow them over and over again. Let's say I borrow your car or your Sprinter that we talked about last week, and I sell it in the marketplace because I'm going to short it. I'm going to buy it back cheaper. I can go and borrow it from the person that I sold it to and sell it again. That's how you get
Right.
that short interest that goes well above what's out there tradable. That's when
And then
it's rare.
let me just add this. Any
Mm-hmm.
buyers of put options that hold on to those that are in the money
Yeah.
are automatically going to get the short shares come Monday.
Yep.
Any sellers of call options, that are in the money are going to get those shares too short on Monday. So there are people who, if you there's folks that are out there saying, I can't borrow this stock. I know what I'm going to do. I'm going to sell call options. I'm going to be forced into the short side of the trade. So there's more than one way to skin a cat when you want to short
absolutely.
stock on a hard to borrow security like GameStop. So I
This is
just
a
thought I'd
good
bring that up
example.
because Chris, I thought I'd bring that up because it's the high flyer this week. It's the one that is on everybody's minds. Maybe not, you won't see it so much on mainstream media, but if you're looking around online, it's the hot pick of the week.
They're talking about it because they love talking about stocks that are up 1,000% in 5 trading days. But they got to put an asterisk next to it, and I'm afraid they won't.
Yeah.
They won't.
Hey, there's the
money
phone
on
right
the line.
now.
Money on the
Let's let me just end. And I want to move back to clean energy again. But before I do, the other thing I want to mention, which is starting to bother me a little bit about this market, is we've been talking about these signs of a top. Here's one that is definitely glaring me right in the face, right square between the eyes. Implied volatility. The S&P 500 is hitting lows now that we haven't seen since August. And if you remember what happened in August, we had IVs that actually shot down to below 15. And then we saw a move, and it was a small move, but I mean, still, we went from almost 360 on the S&P to the following 2 to 3 weeks, dropped down to 320. I know it's not a big deal, but that was about a 10% pullback. So anyone who's looking at where is this top likely to be, you need to be looking at implied volatility. And right now, the IV on the S&P back down below 15. The first time it's been below 15 decisively since August 28th. On August 28th, or just after August 28th, we hit new highs in the market. Then we had the pullback. Are we setting up for another pattern that looks like that? We're above 380. We're approaching 385 now. And so I look at that and I'm thinking, all right, well, what's 10% off of 380? Well, that's going to be a good almost 40 points too. So we could drop ourselves back down to around the 340, even 350 level as a short-term move against this trend, but the trend of very cheap options right now.
You know what? Yeah, I'm with you exactly. I mean, anytime the VIX starts to act the way it's been acting, and we've had those weird days where the VIX has been up when the market's been up, and it starts to tell you that people are bidding those options up a little bit more. And you wonder, if you look at the put and call side, which side are they on? You see that they're on the puts. That little, that gets a hair standing up on the back of your neck sometimes, where you just kind of go, ooh, I don't like that. I want a 16% pullback, Tom. I want to pull back to the S&P's 20-day moving average. That's what I'd love to see right now. It'd be healthy. It'd be safe. It'd be a refresh. People that like to buy the dips.
If anything's going to make it happen, cheap options are telling us that people are just simply buying call options now because they got FOMO.
Yep.
They've got fear of missing out.
And I'll add to it, on a monthly basis, on a daily basis, you got the S&P 500 that's overbought from a technical perspective, and you've got investor sentiment, like the Investors Intelligence poll right now. It's 3.8 bulls for every 1 bear. Historically, the market does not avoid going down over a 4 to 6 week period when you get over 3.6.
Mm-hmm. Mm-hmm.
Yeah.
So, Chris, January 6th, I mean, It wasn't that long ago. Recently I did an article, and it was really kind of more of a follow-up to something you talked about right here on this podcast weeks ago, and it was green energy. And so one of the reasons I did this is because, on January 6th, we know that day that Democrats took control of the Senate, and so Georgia turned blue. Georgia's a little purple right now. I mean, it's purple leaning on the blue side. And so, we now, did the market react the way that a lot of people thought it was going to that day? No. In fact, here we are a couple weeks later, and we've got, new all-time highs.
Right.
And so I look and I'm saying to myself, well, where is what I think the lower long term risk plays that are out there? And it came back to something you said a couple weeks ago, and I want to revisit that, and that's green energy stocks, because something happened this week, which is inauguration week, and you and I were talking about it. And I want you to bring it up. Something happened this week that had to do with federal land, which really pushes green stocks, I think, even more. What was that, Chris?
Well, it's the Biden administration looking right now to shut down 10%. I believe shut down the federal land or put a moratorium on the federal land for drilling for oil and coal, so energy purposes. This is something that we saw the Trump administration kind of open up the land for. Now they're talking about taking it back, and it's the federal land, so they figure, hey, we shouldn't be generating it. It accounts for 10% of the energy when you combine oil and coal that is being produced domestically in the United States today, if that goes into effect. So you've got a situation where you're talking about cutting out 10% of your inventory of energy. And as you know, we've done very well in terms of increasing our domestic production of energy over the last, not even 4 years, 6 years. But when you combine that along with the Keystone pipeline, some big moves on dirty
I mean, it
energy.
is. And I got to tell you, I listen to that news, and there are two thoughts that run through my mind.
Mm-hmm.
The first one is the prospect of jobs going away, which I really think this is not the right time to be cutting, to be all of a sudden stroking the pen and cutting jobs. But at the same time, I want to get out and I want to see. I promised my wife this year, I said, we are going to get out and we are going to see America, because we can't go to New Zealand. They won't let me, I can't get in there. And if I do get in there, I got to spend 2 weeks in a hotel, and, looking at the inside of a hotel. And, I typically don't want to spend more than 2 weeks out of the country anyway. So what am I going to go to New Zealand for? Sit in a hotel for 2 weeks and come home? No. So I said, let's see America. And so part of me wants to do an off the grid view of America, which means, guess what? Camping in and going out into BLM. And when I say BLM, let me make that perfectly clear, because a lot of you don't know what I'm talking about. I'm not talking about Black Lives Matter. I'm talking about Bureau of Land Management, which is federal land. And so, I don't want to go to some federal land and see oil drilling or gas fracking. So, now, I mean, granted that there's a very low probability that I would see that, because there are millions of acres of federal land in this country. And there, and I got to imagine that a small part of that is being mined for gas and oil. But nevertheless, you see where I'm going, Chris? I kind of, on one side, I don't want to see people lose their jobs. But on the other side, I don't want to go, see America, the beautiful, the, Purple Mountains Majesty and
oil derricks. Yeah.
Yeah. So, you can kind of see how I'm getting pulled in both directions. Anyway, let's put on the financial hat. Let me get out of the, personal hat. Let's talk about the financial hat. The financial hat means that I still see this as a win-win for green energy. And so I come back to ICLN. And that's kind of the way to grab this all in one shot, right? Diversification. It's a portfolio of clean energy companies. You can look at, by holding ICLN, you're holding biofuels, you're holding ethanol, you're holding geothermal, hydroelectric, solar, wind. I mean, these are all clean energy sources, all under one roof. ICLN, the ETF. But the other ones, and then I'll ask your take on it. Is it too late to get into something like a plug? Is it too late to get into Enphase? Is it too late to get in Meridian or First Solar? Or are these, because we did see a little pullback in these this week. Are these just setting up for more longer term moves that the short term eye just cannot see?
Let's go with the latter. right now. And it's easy to be afraid of these companies, Tom. And as you know, I've been on these. This has been my area of the market for the last almost year that I've been focusing on. I've got favorites. And what you learn is that when you look at what's going on, these companies are going to have a lot of cheap money coming their way over the next 4 years. It is clear that we're going to see clean energy be part of that one of the larger platforms in Biden's administration, right? And at the same time, we're already seeing moves to phase out some of the dirty energy, even though dirty energy, and I joke when I say that, but your old oil companies have rallied significantly over the last couple of weeks. This is the break or the pause that refreshes in terms of clean energy as people figure out exactly what's going to excel here. Remember when the cannabis phase broke out and nobody knew which companies to buy, and you had companies that were just dropping left and right?
Oh, absolutely.
That
It
is
was,
what
it was all of a sudden everybody had to grab everything on day one, and then there was a lot of consolidation. There was a lot. I mean, it's just like the internet. It's like mobile phones. It's like anything. You get 1,000 companies that start, and then you get a dozen that finish.
Yep, electric vehicles. I mean, now you've got GM, Ford entering into the electric vehicle. This is the same thing that's going to happen with the clean energy. But your companies that you just mentioned, Plug Power, Sun Power, Fuel Cell, ICLN is the safest way to play it. TAN, the solar ETF, the other safer way to play. You get away from headline risk. You get these companies in a basket. But Blink Charging, they're for real, Tom. They really are. And when you talk about your boondocking and you're going out on the BLM land, you're going to have solar panels out there. So you're going to get familiar with First Solar and companies like that. You get really into the technology, and there's a tangent or a pivot point there. A lot of these semiconductors, Intel coming off a bad report last night, a lot of those semiconductors have switched gears and are going after the solar industry. Kind of like NVIDIA got out of the gaming technology industry and went towards autonomous cars. It's going to be a big movement for some of these semi companies.
Right. And, let me just mention real quick as we close up, the technology of solar is just, it's like a lot of people think, well, how can Intel come out with yet another better processor? And it's called exponential gains in the industry. I mean, I remember when Intel, when we had the 1088 processors, and we thought those were cool back then. And then all of a sudden we started, moving out of that and moving into the bigger processors, the ones that actually, we continue to achieve twice the last speed. And, you look a couple of chips back and, we're at 100 times, 1,000 times, 10,000 times the speed. It's absolutely amazing. And yet they still continue to outdo the last chip with the new one. Now, for us, when I look at, I got a new laptop sitting in my desk. I haven't opened it. It's still got the plastic on it. I haven't opened it in a month. And I'm sitting here wondering, do I really need this? But I know that it's going to have speeds that are going to be greater than the current one that I have. But am I going to be able to see it with the naked eye? Maybe, maybe not. I think once I load that thing up and I put enough software on it, it probably will. I will see a big performance number. But here's the thing I'm going with. All right, I'm not talking about chips right now. I'm talking about solar panels. Solar panels are also getting a boost in technology. There are solar panels now, which because I'm starting to study a little bit about the actual product. There are flexible panels right now that will not crack under pressure. That's not the big thing. The big thing is that the way the sun hits these, you get optimal solar charge when the sun's sitting right on top of the panel. But the problem is a lot of these panels, you've got to mount them. I always wondered why they mounted them off the roof. You need that air circulation to go under because the heat of these panels can actually destroy the panel. In fact, a lot of panels, when you go over 75 degrees, they start to drop in efficiency. Mm-hmm. And if you're in Florida, over 75 degrees is 90% of the time you're in Florida.
It's 8 o'clock in the morning. Yeah,
exactly. But there's new technologies now that are making these panels flexible, stronger. You can walk on them, and more importantly, the way some of these panels are set up, you don't need that air circulation underneath, so they can actually be put right on top of the surface. And better yet, they can draw very good power when the sun is not on top of you, when the sun is just peaking on one side or setting on the other, or even on a cloudy day. This is where we're going with this technology. It's just going to continue to get better, and I think it's going to continue to push these green stocks and ETFs.
Absolutely.
So, yep. Hey, Chris, final words.
Boy, final words. Boy, you caught me off guard there, Tom. I'd have to say, let's go back to that idea of a little bit of a healthy correction right now. If I could ask for something for my after Christmas gift, that's it. Give me a little bit of a refresh in this market, and you're seeing it already in the clean energy stocks that you were talking about. Be on the lookout for the buy the dips there.
And I will add to that by saying that we are if you didn't know it, okay, and most of you don't, because it's been a love fest of the inauguration of Joe Biden. Mm-hmm. And I only say that, I'm not saying that whether you're a Democrat or Republican. I'm saying that because when you turn media on, everyone's forgot about the big E, all right? That I don't say elephant, the big E in the room, which is earnings. And earnings have been coming in, and they haven't been, with the exception of a few sectors. There's a lot of stuff that, United Airlines, for instance, there's a lot of brick and mortar companies that are coming out with earnings that are making everybody say, oh, wow, wait, and the answers that these companies are coming out with is, well, we got to see about the vaccine rollout. That's going to determine the life or death of our company. This is coming out, and I think earnings could play a role in this 10% pullback that you're looking for, Chris. I think it could happen in the next 30 days.
This is usually the quarter that does it. Fourth quarter earnings, which happens in January every year. This is the one where you usually get that pullback. If you remember last year, it's easy to point the finger at the pandemic and the coronavirus breaking out, but we were already sliding when that news hit the tape. And it's because everybody sells the news on January earnings.
Yep, that's right. Hey, Chris, thank you for joining us, everyone who's watching or listening to the program. I want to say this: stay safe, stay warm, and we'll see you next week. Bye now.